Hi, my name is Kathy Keeley, and I'm doing a project on Kate Spade and whether or not to buy or sell Kate Spade stock. As a background, Kate Spade started in 1993 by a person named Kate Spade and her husband. They met in college and moved after that to New York City. And after working for 5 years for a magazine, they decided to branch out and start designing handbags. They started out with one store in New York, and the unique designs and colors took off and made them a very popular style very quickly. The current Kate Spade is owned by what was formerly Liz Claiborne Company, and it is comprised of three business segments: Kate Spade North America, Jack Spade, and then Kate Spade International. There's a small part of the company that designs jewelry in exclusive agreements with stores like Penny's and Kohl's. Most of the revenues for Kate Spade come from Kate Spade North America, so a lot of the sales are domestic. Industry analysis. The luxury handbag industry is a little tricky. The current move is by millennials is to move to online shopping and e-commerce, and that obviously reduces the amount of capital investment needed. No stores are needed, so the barriers to entry are quite low at this point. Additionally, there's an issue. A great way to grow the business would be to grow internationally, but the current strong dollar is an obstacle to that. And until that changes, and it's not looking like it's going to change in the near future, it'll be difficult for them to compete on an international level. Other things that I found out in looking at the international market, there's certain countries that are very difficult to sell United States produced items, especially luxury items. India is a country that a lot of businesses just stay out. Brazil is another one, interestingly. Another issue for Kate Spade is product saturation. The company has been around long enough that it is kind of losing its cool. A luxury handbag or premium handbag is desirable to people as long as not everybody has them. They want to have them because other people don't. So it's kind of losing its cool. The other thing is that historically, Kate Spade has been purchased by baby boomers and such with their larger purchasing power, but that is shifting to millennials who don't define luxury items as something like a purse. It might be something like great organic food or craft beers or travel. Travel's very big for millennials. So there's a shifting purchasing power demographic that's a real risk for Kate Spade. And then the whole industry as a whole, handbags and like luxury accessories and clothing is slowing in growth in general. Another issue for Kate Spade is there's absolutely no sense of loyalty. It's almost the opposite. Like if you have a Kate Spade item, you may not want another one. It's not like you're going to only buy Kate Spade purses for the rest of your life, like say a pair of tennis shoes, you're always going to buy Nike or something. Another issue for them is trends. Trends are going quicker and quicker from concept to market, and that makes it hard to have the raw materials and such on hand to execute the trends as quickly as somebody may want to. On the corporate governance side, I found that they've had consistent leadership, and the leadership is independent. The board of directors is independent. There's two executives from the company that sit on the board of directors, but neither of those sit on any of the subcommittees, the audit committees and such. An interesting thing too about Kate Spade is they actually have a special subcommittee that is kind of evolved out of their international sourcing, and it's that subcommittee's responsibility to make sure that they're not engaged in any inhumane manufacturing practices. Financial analysis. The benchmarks that I chose, according to Morningstar, it's more like Ralph Lauren or Carter's or something would be a benchmark. Under Armour, another one. But when you Google Kate Spade competitor, unanimously, it's Michael Kors and Coach. Both those companies are a little bit different, so I just kind of went for it and took both companies as comparison. I loaded all the financial information into a spreadsheet and was able to produce the graphs just as easily with two benchmarks as one. Michael Kors especially is interesting. It matches more Kate Spade. It started by somebody about the same time, and it was named after the person who started the company, and it's been in growth since its start, much like Kate Spade. Coach has been around longer. Its sales have been on decline recently, but Michael Kors, like it has a very different financing structure and made it difficult to compare where Coach was more comparable in some of those things. On to financial ratios, liquidity ratios turned out fine. The Kate is definitely lower for most of the parts for current and quick ratio, but interestingly, they all converge over the 4 years looked at between 2013 and 2016. Another point of note is the year ends for Michael Kors and Coach are different. Coach's is about mid-year, so in the June 30th range, and for Michael Kors, it's after Q1 of a traditional fiscal calendar, so at the end of March-ish. So when you're comparing fiscal years, there's a little bit of a hitch there, but analytics worked out fine. On to profitability ratios, gross margin, and return on equity. Return on equity was odd because Kate Spade's equity in 2013 was negative due to a large treasury stock holding that drove the total equity negative. And then it kind of bounces around after that. It's a little sporadic. It's a point for concern. The gross margin analytic looks predictable and steady, which is a good indicator. Not as high as Coach, but very comparable to Michael Kors. Then what happened with the return on equity, it was so sporadic, I did a DuPont analysis just on the Kate Spade stock. And in graph form, the DuPont analysis looks like the issue is the equity multiplier. But when you look at the graph down below it with the actual numbers, it turns out that it's actually the operating efficiency ratio that's driving the sporadic return on equity numbers. And in 2015, the operating efficiency was only 1%, which is a point of concern. Like mentioned earlier, the gross margin is fine, but the having an operating efficiency of 1% is inconsistent and of concern. Looking at it, it had to do with digging into the 2015 financial statements. It had to do with joint ventures and getting rid of a joint venture in China, Kate Spade China, cost them a significant amount of money, and then they also invested in operating efficiencies, which should help the bottom line in the future. So it was the reason behind the bad statistic is actually a good one. It should produce more profit in future years. Next, just looking here. Oh, and then, so the next analytic is activity ratios. Inventory turns, Kate's inventory turns have improved dramatically. And again, it's the three companies kind of converge towards 2016, where, Kate's had dramatic improvement. The other two have been more steady. And then sales to working capital is a little strange, all over the place. Kate Spade's is actually gone downhill, and but that is also just something for an investor to watch out for. Debt ratios found that debt to assets, Kate Spade looks reasonable in that they have not too much debt to their assets, so they're not having to take on too much debt. And this is where Michael Kors looks really fantastic. They really aren't carrying any debt. They're financing their assets by using their retained earnings, basically. And then liabilities to equity, again, that one is going to be skewed because of that negative equity in 2013. And then we go on to the bond analysis. And this, I looked at the times interest earned, which is a very good metric to know. Kate's taking their times interest earned, they fall into an A+ bond rating, which indicates they're a healthy company from an ability to cover their debt. Next, we go into being able to compute a free cash flow. A beta analysis was done on Kate Spade. The beta of 1.3434 was found, which makes them more risky than the Standard & Poor's index. And then an R squared of 12.49%, meaning that all but 12.49% of Kate Spade's changes could be diversified with portfolio management. In the free cash flows model, we had to compute the CAPM, which came out to 19.12% for Kate Spade, and then the free cash flows for 2016 came out to $154,634,000, and going down below, the free cash flows present value is 15.34, where the current stock price is trading in the 18s, meaning it's probably overvalued on the stock market. But on the flip side, the PEG analysis brought back an under 1 number, so it's according to that, it's undervalued. In the end, I recommend sell, not so much because of analysis, but because of the market. I don't see it. They seem to be continuing to go into markets that are going to sell themselves out as soon as the demographics of the purchasing groups change, and the long-term success of Kate Spade is at risk because of that reason.